Hey everybody, Boris, this is BK Forex. Welcome to the weekly technicals for the crosses for August 28th to September 1, 2017. And I think the story in the crosses kind of is very interesting this week because we have these flows in the CAD and the flows in the euro kind of both ways and a little bit of flows in a pound. So I have three ideas for you, all of them very different in the initial premise. So dollar, let me just sort of go through them and show you the levels, then we'll go take a look at the charts and I'll show you why I think of those things. Kiwi CAD, to me, most interesting weak versus a strong pairing this week because, of course, dollar CAD has been on a tear and we have this extra catalyst of Hurricane Harvey coming in, possibly helping oil prices. So the move towards the 90 handle, which is a very, very important support level, could very much be in the offing. We're very close to that level. And if you notice, and I'll show this to you on the charts, when the calm dollar crosses tend to trend, they trend for quite a long time. So a move downward here seems to be very imminent. Euro yen, on the other hand, is kind of very interesting because this truly could be a breakout trade this week for some of the more non-obvious reasons. So this trade has been in a very, very tight, tense 27 to 30 level for more than a month and a half. And if we have a breakout to the upside, ironically enough, my sort of argument here is that if we have positive dollar news, it's going to be positive dollar yen, but not necessarily negative euro dollar. So the decline in the euro is going to be very mild relative to the potential upside move in the yen. So you could have this big breakout through this 130 level that could open up the way towards 131 and higher, which shows a lot more clearance on the charts. And that is an interesting idea that could very well be the story this week as we have the run in the euro perhaps towards the 120 and then followed up by the move in dollar yen if we get positive US data at the end of the week. And then last but not least, this is a very dangerous trade. I'll be the first one to admit it, but on a technical basis, there is just so much resistance here that it's really worth a gamble. The idea here is that if euro takes out 120, it's going to exhaust. It's going to bring in some profit taking, and that profit taking certainly is going to take place in the euro pound as well, which has been under a massive amount of forward movement for the last 2 weeks. We've been very good on being the long side of this trade for the last 2.5 weeks and showing that there's a potential here towards the move towards 92. But now that 92 has been taken out, when we look at the charts here, again, I'll show you how the 94 level becomes a very big resistance. And it is a little bit of a trade of, picking up nickels in front of a steam train, but a scale up short, that is several probative trades into the short zone, I think could be an interesting trade, not just for this week, but perhaps for the next week as a mean reversion trade takes place. So let's take a look at the charts here. And actually, I want to start with Kiwi CAD first. We'll get to everything else. So Kiwi CAD, this is my point here of how powerful the trending moves in the calm dollar crosses can be. They sometimes can take 3, 4, 5 weeks. These are weekly candles before they fully exhaust themselves. Here's a move to the upside on the Kiwi. Of course, a move to the downside that is pretty continuous. And here we are angling towards this 90 level, which is a very, very key support level. A break here opens up possibly a move all the way down to 89, 88. 88 really is the true support here. This is not a big moving cross, but as I said, a move down to 120, 24s in dollar CAD could be the catalyst here that could break us all the way down towards 89. So worth watching this. It's a way to participate in CAD strength on a lower volatility basis. The next idea, of course, was the euro yen. And here again, let me show you the technical structure that's kind of interesting. So here we have this big consolidation. It's actually 2 months worth of consolidation at 27 to the 30 level, where we've just kind of been capped at 30, buying down to 20, really 28, not even 27, 28. So last week we had this big move on euro strength. And the question this week, I think, is that if we have a little bit more of euro strength followed by yen strength at the end of the week, we could be breaking out above this 131 towards the 132 level. So I kind of really like this trade from every angle, mainly because I think it's sort of non-intuitive, and that perhaps is one of the better reasons for why you want to trade it, because nobody's really paying that much attention to it, and we could have a chance here for a nice clean run all the way up to 132. And then the last trade, and this is really perhaps the mean reversion trade that is really tough to do because everything here says it's a straight up move. We're actually closing on the highs, euro strength, and we certainly could have euro strength, I think, all the way up to perhaps 93s. But let me just pull you back, not one, not two, but 3 or 4 years back, and you'll begin to see that these areas, this 94, 95, are really double top areas, triple top areas. And of course, the parity, which is way, is a massive, massive resist point. But let's just focus on the fact that it's reasonable to think 94, 95 are going to be huge resist points here, given the technical peaks overhead. And if you begin to build the small probative positions at these levels, yes, we're probably going to get rolled over towards 93s, but 93, 93.50 probably is going to find that exhaust point in euro pound. And it's very hard to tell exactly when the exhaust point is going to come in, which is why I'm sort of arguing for a probative position here, scale up position with a couple of possible entries. But it does look very much like a possible turn. Now, even if we just sort of come back here and look at the double top formation here, yes, we kind of broke above the double top, but not conclusively. So we could go another 50 points and then make a top, and that would actually be able to seal the double top that we have over here at the 92.50 level. So my argument with the euro pound here is not that it's an immediate short, but it's a probative short with this whole 92.50 to 94 level seeing a lot of resistance on the technical basis as we go forward, and it's certainly due on a mean reversion basis to come back a little bit. Basically, it's an argument for a little bit of pound strength as the week continues. So overall, I think the big stories in the crosses here: the CAD strength provided with Kiwi CAD cross, the stealthy move in euro yen, possibly to the upside, the kind of a build up through the 130s and a move higher. This basically assumes two things: that we don't have any further decline in dollar yen, and that if we do have positive U.S. data, the euro really doesn't decline, and the positive dollar yen moves carry us forward on the euro yen basis. So I think those are kind of interesting ideas, and of course the mean reversion trade in euro pound as the final idea. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.